just, as I said, it's just a structure narrative. So you can see that the structure number 1 starts just there, doesn't it? So, I mean, if you want to start highlighting when the 1 phase appears, then you can highlight when the 1 phase appears. But obviously, we're now moving into a major volume area. So that's more important, isn't it? When you move into a major volume area and the 1 appears, well, you're starting to build a storyline around a possible structural high just here, right? So you're getting a technical structure high coming in at that point. And when it comes down into the bottom edge, you can see we're in that narrative, the same narrative, and then we get a 2 point just here. You see it? So the 1 point appeared on the candle before, so we start getting ready for that structural low price coming in. And obviously at that stage there, it's just about drawing in the possibility of a structural low appearing. So I don't know. I mean, does anybody find it useful? Has anybody used it, or is it just a waste of processing time on it? I mean, I don't know if Sam's asking because he likes it, or if he's asking because it's a pile of mince. But you know, when you see the structural elements, you'll see that there's a fair degree of quality about the type of areas that it finds, isn't there? You know what I mean? I mean, if you just traded the structural changes and you sold here and then you sold here and then you bought here and then you sold here and then you sold here, you sold here, you bought here, and then you bought here and then you sold here and then you bought here, you've actually done pretty good. Yeah, you've done pretty good, haven't you? The 1 point, well, you can see how it builds in stages. And this is our own take on this, right? This is our own take. It builds in stages. See, for example, here, you'll see that we get the first stage, the second stage, and then the third stage. You see it? So the first stage is here. So the first stage is like the end of the beginning. Sorry. Well, it's the end of the beginning or the beginning of the end. I suppose you can argue whichever way you like, right? So this is like the end of the beginning phase. And then when we move to the 2 point, we're now starting to see the absorption prints, right? So this is the absorption phase. And then when you see the spike, that should be the markdown. So when you see the spike, that's like the end of the end, if you like, for that technical phase, the end of the end. So then you draw a line against the end of the end. Yeah. So for example, over here, you can see that we get the 1 and the 2 come in at the same time. I mean, but if you look at it, it's very, very early to the party, right? So, you know, that comes in up there. So that's the beginning of the end. And then you see the volume really starts spiking. So you're expecting this to become a real bottom edge. And then, of course, you get the spike here when the price reverses, which now puts you into a line, allowing you to suggest that there is now a technical end to that down move. So if there's now a technical end to the down move, you can now anticipate the probability of price rising. Yeah. So is it any good? I don't know. It's just a technical indicator. You can get exactly the same information from the MACD or a stochastic or an RSI or a CCI or anything else. But it's just a more dynamic kind of format of going into the zone and kind of leaving the zone, if you like. And the reason why that they had first suggested was that they were originally proposing that we use this format for the Fisher transform. So instead of the Fisher transform being a cyclical line, do you see where we're going? The Fisher transform would have like the pin zone would start with the first phase. The second phase is when the market makers would maybe start closing the gap or whatever, and then the third phase is when we actually get the flip on the transform. So I think the original idea of having this on the screen wasn't about having it on the screen. The original idea was using this as a visual, but attaching it to the narrative of the transform and then making that the visual. So we would then be able to tie the two things together. So in other words, you would see the technical absorption and reversal as well as the cyclical absorption and reversal at the same time. And then you would get that confluence at the same time telling us this is going to be the deal of the century. And if that was the case, then that would become a really, really powerful piece of information. But it's always about stuff that catches your eye and tells you a story. And I quite like the story that this tells. You might remember and the reason why I quite like this storyline is because it takes me back to a classroom we did about the chapel. Do you remember? It's almost a Johnny Romo type situation. What's his name again? I can never remember that guy's name. Johnny Romo situation of a low hanging Batman. Do you remember a low hanging Batman? Do you remember those trades? Low hanging Batmans, Bat people. So the idea of a low hanging Batman was basically this idea of a chapel, right? So if you imagine a chapel, and then when the chapel forms, you can imagine the idea that in the chapel we then get that type of pattern there. You know what I mean? And then as we run into a bottom edge, we did this in classroom 10 years ago, guys. This is not new. So the same kind of thing happens in here as well at the bottom edge. You get that sensation that you're getting the same idea into a bottom edge, and that type of idea. So we start seeing this phase, and we start seeing that phase, and then we see this phase. Now, so when we see that as a storyline, you can obviously understand that narrative, can't you? This idea of the church and the spire and steeple, and this kind of caught my eye because it reminded me of that classroom we did. The idea of this type of pattern here. It's obviously the opposite way around, because this part is the markdown phase, right? I said to the guys about flipping the cells over so that it would actually point from the top to the bottom instead of from the bottom to the top for a cell, but we never bothered getting round to it. It seemed as if they couldn't be bothered doing it, just because it was boring. So we just left it as it is at the moment, because we didn't even know if we were intending to use it. You'll obviously realize we haven't really spent any time on it, because it's not really been something we thought was worthy of spending a lot of time on at this stage. But if people like it, if people think it's any good, we'll obviously go over it, and we'll obviously evolve the idea behind it. But it's just a technical study. It's nothing more. It's very similar to a MACD divergence type idea. And you can see, obviously, if you look at when it happens, the idea is that we've had this slowdown and then eventually a reversal coming in, and it highlights a technical reversing point. Yeah. So you can see, obviously, we got a cheeky couple of little buys at the bottom edge, but they're only level ones. So it's very early to party into the bottom line there. So, for example, you possibly draw a line there. Very, very early to party here. These don't make any, I'm not going to be paying any attention when we're only in the level one phase. I'm only going to pay attention when we start getting into the ones, the twos, and the threes. So you can see here, we get into the ones and the twos. There's the two there, and you can obviously draw a line against the two. And there's the three comes in there. You can obviously draw a line against the high at that stage, and that gives you a price level that you're now going to be paying attention to. And then we go into it, another one at the same idea again. There's the ones, there's the twos, and there's the next reversal coming in there. So the basic way I would use this is when we get into the two phase, you draw a box from the two phase beginning. So that becomes the box there. So as soon as the two phase begins, a box begins to draw. And as the two phase appears, you're now expecting this to be the high and then the markdown from the high. So if it breaks that box, it's usually going to be a sell, right? See what I'm saying? If it breaks that box, it's usually going to be a sell away from the box there. And obviously, if you took the sell away from the box there, you did a pretty good bit of business. So you can see in here, there's the box forming there, yeah? So there's the 2 point, there's the box. So when it breaks away from the box, it's usually going to be a good bit of business just in there. So there's your sell trade there at the bottom line. But you see that the box beginning there, when it breaks away from the box, it's usually going to be a good sell. Did that make any money? Sure. So when it breaks away from the box, it's usually a good trade. Well, this one never broke away from the box, did it? You know, it stayed inside the box. So that's not going to be giving you any trades. Here's one that breaks away from the box, gives you a scratch, still makes money. But it breaks away from the box, it gives you a scratch trade, and then it, you know, it does give you a scratch, but that's okay. And then there's another box that forms in here. And again, it's just about when it breaks away, does it give you a scratch? At least a scratch? Sure, it does, absolutely. Doesn't make you much money, but it gives you a scratch trade. And then there's another box in here that forms at this point, which is this box here. There's no close below that. The close actually takes place over here, but then we get a brand new one before that closes, and that's at the high price. It breaks below here, and that's your sell trade. And that also gives you some, it gives you a scratch, and then, of course, when it breaks again and it breaks again, it gives you a nice profit. A break above the box here gives you a profit in terms of that type of reversal trade narrative there. A break above this box. And again, this is a more awkward one because it's about finding where the box actually begins, which is there. A break above that box, well, that gives you a nice profit as well, doesn't it? So when you see it, I mean, it's just, it is what it is. I mean, it's just what it is. I mean, whether it's crap or whether it's good, you can see we got a box forming in here. We never ever broke away from the box. It's still in the box, isn't it? So this one hasn't actually broken away from the box, so it never became anything. That's okay. That's absolutely fine because it never gave you a trade entry anyway. So there's no trouble with that as a storyline. The idea is we need to see buying above that line area to see what happens. It is, again, it's just a technical study, guys. It's nothing more and it's nothing less. It has no information content except to tell us about a technical study that we may or may not wish to pay any attention to. Anyway, when are we getting into classroom? 15 minutes, guys. Enough time for a triple. I am currently short a couple of Forex. I'm currently short dollar Swiss. Did somebody say dollar Swiss to me earlier on today? I think somebody fancied dollar Swiss earlier on today. Imagine fancying dollar Swiss. Somebody say dollar Swiss to me this morning. That was something they were going to be watching. I'm sure if you were watching dollar Swiss, you're already in it. Was it yourself, Ulrich? Because you got your level 2 liquidity. You got your liquidity that you were wanting for dollar Swiss, because it certainly was the trade I took on dollar Swiss myself. And I wouldn't have actually I wouldn't have taken this dollar Swiss if it hadn't been for somebody in the room, believe it or not, because somebody in the room, and if it was Ulrich, it was Ulrich, but somebody in the room happened to mention dollar Swiss, and I thought I better take dollar Swiss just in case somebody else got it, and I'm sitting here like an absolute doof. So I thought I'm going to make sure I don't lose sight of where the buy side liquidity is, and there's the buy side liquidity there, isn't it? So at 12:30, 1 o'clock, we actually got a dollar Swiss trade on into that buy side liquidity. So there's this sell into that buy side liquidity, 87.75s, and it's dropped down to 87.30. So it's made me 45 ticks. So I appreciate anybody, whoever it was that said it, if it was Ulrich, 45 ticks. Thank you very much. I'll take that any day of the week. Sell side dollar yen as well from top edge liquidity is making money. No other trades for me. You can see we don't have any bias, but that was a 205 minus. This was a 225 minus. I am going to trade those two trades into buy side liquidity. You agree? Any day of the week, and 3 times on a Sunday morning if I'm lucky. That never happens. 3 times on a Sunday morning at my age?